are in listen-only mode.
Hi, everyone, and welcome to the Women's Business Center webcast. We are so excited to have everyone with us today, especially our two presenters, David Plemons and Rita McDaniel with the David Plemons CPA team. We're going to be covering Paycheck Protection Program today, so while we give the audience just a few more minutes to trickle in, I'd like to give them a chance to introduce themselves and tell us a little bit about what they do and the presentation that we're about to have with them. Oh, and by the way, a couple of housekeeping tips. There are a couple of handouts in the handouts section of your options there under attendee. There's two handouts. One of those is an Excel spreadsheet that they will be explaining here in a little bit, and the other one is the slides that you're seeing today. So feel free to download those, and you can review those at your own time. And without further ado, I'll hand it over to Rita and David. Thank you both for being here.
No, thank you for having us.
Appreciate it. Yeah. My name's introduce ourselves, I guess, a little bit. I'm David Plemons, and our firm's been around 22 years, I believe, and our focus is the small business community. So what we do all day long is work with small businesses. We give them advice. We take advice from them. We help them do whatever it might be, tax planning, tax preparation, QuickBooks training. We do all kinds of stuff, and I just mainly hand it off to Rita, and she does it all.
Thanks, David. Yeah. So, well, I'm Rita. I'm the operations manager here at the CPA firm. And like you said, we work with small business. So we've been pretty involved with helping our clients work through the Paycheck Protection Program, receive their loans, and then now also how do they spend the funds while they have it, and then how is it going to get forgiven in the end. So it's a bit complicated because it's changing all the time, and they're putting out new, so nothing's ever really finalized. So we don't really anticipate anything to be finalized until probably around September timeframe, but it's mostly on the lender side.
Yeah, so every time they send something out, it generates more questions than it solves. So everything, the can's getting kicked down the road as far as final answers to around that sometime this fall. So anyway, we'll tell you what we do know. So most of you may have already have your loans. If you haven't had the loan, we're going to give you a little bit of insight into how to get one. Last I've heard, there's still money out there. There was actually 2 rounds of this that happened. The first round, money was pushed out and it disappeared within about a week or less. Had so many people applying for it. It was early April. People were somewhat in a panic. What am I going to do? And it's almost a rush on the bank to try to get this money. Money disappeared. Then a couple of weeks later, some more money came from the government that kept us going. But if you are interested in obtaining the PPP loan, what its intent is to have you maintain your employees on your payroll and not have them on unemployment. So if you're a government, think about this: we could not fund the employers and have all these people going to the unemployment, which everybody knows they got clogged up. You call for days and never get through. This is another way around that, is let's just give the money to the employers, have them keep the employees on the payroll, and therefore they're not over there clogging up the unemployment system or whatnot. So if you want to do one of these loans, if you haven't yet, you do the loan through your bank. You do not do it directly with the SBA. You go to your bank. Every bank has their own application. Everyone's a little bit different. They're very bank specific. Contact your business loan officer and they will tell you what to do. More than likely, they've got a portal. They'll give you a web link to or something. You just log on and fill out the information. But the loan amount is based upon the average monthly payroll costs for the preceding calendar year. So basically, you're saying, what was my payroll in 2019? You get an average monthly cost of that payroll, and then 2 months of that basically is what you apply for with your PPP loan. As part of that, you must certify in good faith, and this really wasn't heavily enforced on the first round. The second round, they're really getting more involved, that the current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. Exactly what does that mean? I don't know. We all have signed things when we got the loans that, yes, we thought basically things are going down the tank, we need this money, or we're going to have to lay everybody off, whatever it might be. If you have signed one of these, this good faith thing, and you didn't need it, it comes around later on and saying you didn't need this money, then the government's really getting a little aggressive. They're talking about going after people, especially the bigger players. And I know you guys heard the news that some of the big outfits got a bunch of money the first round. Most of them, or a lot of them, have paid that money back to avoid being chased down and chased down by the government. So they gave the government gave all the way to May the 14th for everybody who'd applied for a loan prior to the 24th of April to give the money back, and then they would not be held liable for that good faith certification that they signed.
Now, currently, the only news that they have out there right now for the good faith certification is for anybody that received over $2 million in loan proceeds if they don't pay it back by the May 14th deadline, that they will go have an extensive review process to prove that they had a necessity to receive the loan. If not, then they will get penalized, but they haven't issued what that penalty is going to be yet.
Okay, as far as administration of the funds, once you get the money, the day it hits your bank, you have an 8-week time window.
I'm sorry. There, okay, sorry. Driver is going crazy.
That's okay. You got an 8-week time window to actually track where that money went. And we have some suggestions as to how to track that. Everybody that we have worked with on this, and we worked with quite a few, is we've suggested open a brand new checking account or use a checking account that's not being used for anything else. Put your PPP money into that account. So once you do that, every single penny in that account is PPP loan money that you got from the bank or the government. Then as you use the money, transfer it from the PP account out to the payroll account or the operating account, wherever you're going to spend it as you need it. So for example, if I'm going to run payroll this week and I need $3,000 for payroll, I would transfer that $3,000 to the penny out of the PPP account into the payroll account, assuming that every move I make is going to be double checked by somebody at the bank or somebody at the government. I need to be able to prove 100% this money went from here to here, no questions asked.
Now there's the little bit of a difference, not to the exact penny. That's what that spreadsheet is that we attach to the bottom, is because the forgivable amount that they're calculating is the gross pay of the employee, the state taxes that you're paying to on behalf of your employees, any benefits that you pay, retirement plan, health insurance, and that becomes the transferable amount that you can put in there. So they're excluding federal taxes paid by the company. They're including the employee's portion, but not the company portion.
Yeah, why don't you go ahead and flip to the next chart?
And while we do that, just a quick interjection here. If anyone has questions in the audience, there is a chat. For those of you who are tuned in via the computer, you can type in a question into the question box or the chat window, and we'll try to get to those before the end of the session.
Okay, this is somewhat a list of what the money can be used for. And as Rita was saying, the payroll cost is the payroll cost except for the company match to the Social Security and Medicare, and the federal unemployment tax. So your federal taxes that the employer pays are not, you cannot pay those with PPP money. So let's say in my previous example, the gross payroll, including these, was $4,000, but $1,000 of the dollars were the federal taxes. Only $3,000 is available to be used to be covered by your PPP money. You can also a valid expense is interest on your mortgage obligations, assuming the loan was entered into before February the 15th. Now, this is not the total mortgage payment, it's only the interest. So if you're paying a mortgage, there's an amortization schedule. Every payment is part interest, part principal, and maybe even part insurance and property taxes. You can only include the interest portion on this as far as with the PPP money. Your rent, you can use it to help cover your rent as long as your lease was in force before February the 15th. That's a good date. They liked February 15th, so they used it a lot. But your lease had to have been in effect before that, so if you pay rent, the rent can be used as part of your PPP money. Also, your utilities. So as long as your service began before our famous date of February the 15th, 2020, your utilities can be covered. And that's all great and wonderful and everybody's happy. However, there are limits of how much you can use for the interest, the rent, and the utilities, and that total is 25%.
Mm-hmm.
So go ahead.
I want to put in there that utilities include, you know, the electric bill that you're paying, but it also includes, they put out a notice that it includes your telephone, security systems, and internet service. So those are all considered utilities under the forgiveness portion of the PPP loan.
Okay. Now there's one other thing that I didn't put on the chart, but we do need to talk about is you can't just say this much. Let's say last year I had 4 people and my payroll was $5,000 a week. This year I got rid of 2 people, but I gave myself a raise, you know, gave the 2 people that left a raise so that my payroll is still the same dollar figure. There's another piece of the pie that's not on here is basically you have to do a calculation of full-time equivalent employees. So you have to say last year from time period X to Y, I had 4 full-time employees, and a full-time employee is someone who works 30 hours or more per week. So if you had 4 full-time employees last year and you've only got 2 full-time employees this year, you're not going to get forgiven for all of that payroll cost, even though you spend the exact dollar amount of payroll because you reduced headcount. So keep in mind, this is the government's way of keeping these employees out of the unemployment line, keep them on your payroll, government's paying for them. They want you to keep your people and not reduce people. That's the goal.
And you want to be prepared to have to pay back some of this money. That's what we've been telling all of our clients is that it's at a 1% interest rate, and to have to pay it back. What we don't have clarity on right now is the tax law changes at the end of the year that they put out in regards to how they're going to report all of this on your tax return at the end of the year. So we should get clarification by September or fall, you know, in the fall. But they're making it more difficult for every new regulation that they put out. It's making it a little bit more difficult to get 100% of the funds forgiven. So if you go into it with the mindset is I'm going to have to pay some of this back, then you won't be as shocked or disappointed towards the end of it when the calculations come out that you have to pay a little of it back. But they are postponing payment for 12 months, and they might expand it into the next 24 months after that. So you just have to kind of keep a watch on it and see.
Now, it's not the government that actually is going to determine if you have the loan forgiven. It's going to be your bank. So all of your proof of what you did with the money, all of your calculations is going to be shared back with the bank. They have their own set of rules that they're going to work through, and they're the ones that are going to determine whether your loan is forgiven or not. There's one other thing that's still open, or it's out in the air, is, okay, if I am receiving money to cover these costs, am I going to be able to deduct these costs on my tax return? Currently, and they're working on changing it, currently the answer is no. You got free money to cover expenses, therefore you can't deduct your expenses. That just came out as a default. There are people working it. I feel fairly confident that before we get around to filing our tax returns, those expenses will probably be deductible. So just don't stress over it too much right now. I think relief is coming on that side. And that's all I have. You have anything else, Rita?
No, just been trying to, the clients that have us on retainer that we're working with, you know, I've just been trying to keep them calm and kind of keep them prepared for what we don't know is coming down the pipeline. So the biggest thing that small business owners can do is just to, number one, stay calm, because that's our big preach for the last 3 months or so. Stay calm, and then just prepare and plan and just follow the regulations as they are now. And if they change, follow those regulations. Just try to keep it as close to the board as possible. And really reach out to your financial teams, really work with your lenders, really work with your CPAs to try to figure out, you know, to help you, walk you through tools like we just put out with the spreadsheet. We have, you know, we're coming up with different things, and we're staying on top of all the regulations as best we can, to try to push out that information to all of our clients, and all CPAs that I've talked to so far are doing the same. So if you have a CPA, reach out to them, see what kind of guidance or help that they can give you, as well as your lenders. And the Women's Business Center is a good resource too, you know, to kind of help keep you up to date and kind of guide you through all of that, this process, because it is kind of a constant changing mode. Attend as many educational seminars as you can to kind of keep up to date on the things that are changing, you know, towards.
And
go ahead.
Yes, thank you for that, Rita. Yes, absolutely. We are here as a resource for you. Definitely reach out to the Women's Business Center. And there are several questions in the queue. So if y'all are okay, I'd like to go through some of these.
Please.
And yeah, so this question from Alyssa, can 100% be used for payroll?
So yes, you can get it forgiven if you're using it 100% for payroll. The calculation that you go through will allow for that. So if you're not using it for those extra expenses, as long as you meet your FTE and more than 75% of it is used on payroll, then it's possible for it to be 100% forgiven.
Okay, great, thank you. Do you know what transportation costs would be covered, fuel for business vehicles, for example, if any?
None. Under the PPP, there would be none.
Okay, great.
So if you are using the PPP money that you received towards non-qualified expenses, then you will have to pay that portion of it back.
Okay, great. Can you apply for a second PPP loan if you've already received one in the first round?
No, the only one that they opened up for was an amendment for partnerships. So to allow for their guaranteed payments or their distributions and things like that. So they allowed partners to go reapply. But in this case, if you've already received one, then you will not get another one.
And there is discussions to allow that, but I have not heard anything that is anywhere close to being approved yet.
Mm-hmm. If it does come out, it's going to be after June 30th, because the June 30th is the end of the second round of funding. So after June 30th, they'll probably, if they're going to make any more amendments for adding funds or allowing people to apply a second time, it's going to be after the June 30th timeframe.
Yes. Keep in mind that this round of funds only covers these expenses for 2 months.
Mm-hmm.
If the economy continues to drag, then yeah, I could see that next round that they're talking about coming out to cover employees for a longer period of time.
Great. We have a couple of questions on sole proprietors. Let's see. How do you prove that you spent your PPP loan towards payroll when you are a sole proprietor? Good question.
Okay, so a sole proprietor, they're considering the draws that you take as your payroll portion. So they're just kind of using draws and payroll interchangeably. But this is where you have to be super, super careful on separating your PPP funds from any other funds that you have for the business. So what we've had our sole props do is, again, put that money into a whole separate bank account, savings account, something that's not being used, and come up with an average amount that you drew out of your business for a 12-month period. So say on average, you withdrew $1,000 as your payroll, so to speak, on average, then you take that $1,000 on a monthly basis and transfer it from the PPP account that you set up into your home account to spend for your personal expenses.
Great.
As well as like for your mortgage interest, you know, make a singular transfer for the mortgage interest, a singular transfer for your utilities and things like that. So you can have a really clear and concise paper trail, because it's going to come up when you're going through the review process with your bank. Each bank is going to have a different sets of questions that they're going to ask to prove the forgivable portion of it, because they're kind of on the hook until the government gives them their money back. So they're going to have a little bit, more detailed questions to ask, that they're going to be asking you. So you want to make sure all of you can give them one-for-one transfers to make that process a lot easier.
It'd be a good time to reach out to your banker now and see if you can get a hold of them. Say, hey, I've got some questions. How are you guys going to interpret this? How do I meet your requirements for forgiveness, and get some specifics from the bank?
Correct. That's a good idea.
Question, and somebody in the queue asked about that specifically. What if their bank isn't letting them create a new bank account?
As far as like just opening a new bank account to put it in, if they have a separate savings account, then they can just empty out the savings account and put just a separate bank account that you're not using. And then I don't know if you can look at other institutions and see if they would allow you to put the funds in there.
Because I've never heard of a bank not allowing a new account for this.
That's
okay.
Yeah, and that might be a singular situation that we would have to get more information on, particularly that. But there might be other bank institutions that would allow you to open an account there. But I would try my best to keep it as separate as possible.
Okay, great. And there are a couple of questions specifically on how to use the money. One is on, can you use it for a loan payment?
Unless that's your mortgage and you're only using the money for the interest, I would not, unless you want to pay the money back. So that's kind of if you use it for something that's not qualified, when you do your calculations, you will end up with a portion of it to pay back at a 1% interest rate. And that's not necessarily a bad thing. So if you need it to do those other things to keep your business open, just be prepared to pay that loan back. Then it's just going to go back, at a 1% interest rate, and you defer the payments for 12 months. So it's kind of not a bad deal for a loan in general. So you kind of have to evaluate where you are in your business situation to determine, is it better for me to be able to open it up and use it for whatever I want and pay it back as a loan, or am I going to stick with the guidelines and only use it for what's going to be forgiven? You just kind of have to figure out what your goals are for your business.
Great. And we have several questions along those lines for those who are working from home, and questions about what utilities, phone, internet for those who don't have an office outside of their home. Is it 100% included or a fraction of the utilities, and do cell phones count?
As far as I understand, cell phones do count. But again, it's going to go back to your lenders and what they're going to consider forgivable. If you have a home office deduction on your tax return, they might revert back to the tax return and whatever percentage of use the cell phone was on your tax return or your mortgage was on your tax return, then that's what they're going to allow you to use for your forgiveness number. But again, every bank is going to be different on what they are willing to put themselves on the hook for, because their risk is, I'm going to forgive this 100% for you, but the government's going to come back and say, okay, no, I'm only going to give you 75% of the money. So their forgiveness, might be a little bit more strict depending on the comfort level of the bank.
And I agree with that. I think I haven't seen it addressed specifically anywhere, but I highly suspect that it's going to be only the portion allocated to your home office, because that is the business part. That is what you could deduct on your tax return. I don't see it expanding to your entire house.
Great. A lot of questions on the home office expenses. So again, just to reiterate, depends on the bank and check with the bank, correct?
Yeah, but
what about
our feeling is that if it's going to revert back to your tax return and what was claimed on the tax return.
But definitely check with the bank and clarify all of this with your specific bank.
Okay. What about bonuses paid to employees during this time?
So it's my understanding that bonuses are still considered payroll compensation. So it's still going to be considered a part of the gross pay calculation if you're giving bonuses. What it's not going to hit is your FTE calculation. So
and FTE means
full-time equivalents. That's the calculation where you take the number of employees that you have, and then you take the number of hours that they work on average, and that'll give you your full-time equivalent number. Of if you have four employees, but you only have you have 5 employees, but 2 of them are part-time, your full-time equivalent might end up to be 2.5, and that has to be at least more than what was the number, David, on that? It has to be like 75%, or it has to match the same as it was the previous year, your full-time equivalent.
Yeah. Now I would think bonuses would be fine, like you said, if that's the way you've always done business. I think if you've never ever given bonuses before and all of a sudden you start giving bonuses, it's going to mess with your calculations, like Rita said, your full-time equivalents and stuff like that.
Yeah. I mean,
and how does it apply to part-time employees?
How does it?
Less than 30.
What was that, David?
But part-time employees less than 30 hours, according to
the Department of Labor.
Yeah.
Okay. And can they increase their payroll?
That's gonna, when you start to give raises and you start increasing individuals' payrolls, that's outside of a regular schedule. Again, what they're aiming for with the PPP is normalcy. They want you to operate as normal as possible with the funds that they've given you. So if it's outside of your normal structure to give raises or things like that, then I would probably hold off on doing that at this time. To make any sort of huge drastic changes might fluctuate it enough to where you would actually end up paying back more of the loan than you had anticipated.
Yeah, keep in mind you can do whatever you want. The issue is to get the loan forgiven.
Right. That's the biggest thing is if you're prepared to pay it back as a loan, then none of this really matters. You can use it for however you want to use it. But if your target is to try to get as much of it forgiven as possible, then you need to stay in compliance as much as possible. So you've got to really toe that line and not try to do anything outside of the normal.
And speaking of normal, somebody in the chat asks that they saw a document that stated that only expenses outlined on the Schedule C, which is the tax document for self-employed independent contractors, would be eligible for forgiveness. Is that correct?
Only the qualified expenses. So when they refer to that, it means the qualified expenses, like the utilities that you listed as utilities, that was counted as utilities on the utility line of the Schedule C, the interest that you included on the interest line of the Schedule C. It's not saying that anything that you deducted is now considered a forgivable expense.
It still has to stay in those categories.
Right.
Right. And somebody asked about specific to cell phones, is it, if they've always paid for their business cell phone service through the company, but it's under their personal name, will PPP still cover it?
My guess is that the PPP would still cover it if it's deducted, if they use that deduction on their tax return. Again, it kind of reverts back to the tax return because we're kind of using the tax law that's in place right now as guidance, since we don't have a whole lot of guidance. So if the business paid for it, even though it's under your personal name and the business paid for it and you deducted it on your tax return, we would say 95% chance that it would be considered as part of your 25% forgiveness portion of other expenses beyond payroll.
Okay, great. Here's another question. I heard that they are trying to extend the 8 weeks. When will we know? Will it affect the first round of recipients if that happens?
My guess is that won't happen because the
Okay.
8-week period it's not a calendar 8-week period. It's from the date that the money was distributed to the individual and was made available. So to extend it, you would have to extend it on a per person basis, and I can't see them keeping track of all of that.
And if they did, it's probably, you're talking about after the June 30th cutoff of round 2 anyway. So
Right.
you're talking, even if it does happen July, August, probably before it would be real.
Right.
Okay, here's another question. I guess, again, just to clarify on the use of funds. So the funds that they were given, we have 8 weeks to expend the funds, but they were given 10 weeks of funding, right? Because it's the 75-25 split. Can we increase the payroll and pay each employee more in order to reach the 100% forgivable during the 8 weeks? So basically 10 weeks of pay dispersed in 8 weeks.
Again, like we said in the beginning, that everybody needs to be prepared to pay some of this back. Like, it's not going to be 100% forgivable. And you can try to game the system as much as possible. And every situation is so unique. To say that would work, we would have to have the numbers in front of us and actually hand calculate it, and make some estimates and some assumptions on whether or not that could or could not work. But I think if you were in that particular situation, you need to be prepared to pay some of it back that you probably won't reach the 100% forgivable.
Okay, yeah, I think that addresses, there's a lot of questions coming in about that specific, like, how do we expend the full amount in the 8 weeks to avoid the paybacks? So
yeah,
I think I guess it was designed that way.
Yeah, it's such an individual, because there's an individual situation. There's such a specific calculation that we would have to go through each of them individually to see, to answer, is this going to be 100% or this 100%? So all we can do is really push out the rules as we understand them right now, and then just urge everybody to stay in communication with their lenders and to make appointments with your CPAs and however you can do that to go through those individual calculations to be as specific as possible and be prepared, that you're not going to get the 100% forgiven.
And keep in mind that this calculation also involves your head count. So if you've reduced head count from last year and you're saying, I want to spend more money on the head count I have this year, you're going to be paying some of this money back. My suggestion would figure out what the impact's going to be, take that amount of money and set it over to the side so that you can turn around and give it back to the government if the calculation works out that way.
Our most general advice, because we're pretty conservative anyway as a firm, is just to be as conservative as possible. Spend what you would normally spend, Don't change anything in the operations of your business. Don't try to bring on a whole bunch of new staff. Don't try to do anything. Just operate as normal as possible and save as much as possible, and then you could just pay it right back.
Here's another interesting question. Does hazard pay raise, is that acceptable during this time? If they have employees working under these conditions, can they justify an increase in pay as hazard pay? Any word on that?
I would say
yeah, as long as it's a normal part of business that you would have done anyway, I think it would be covered.
yeah. But keep in mind, it's head count plus the total pay. You have to meet the FTE head count, and you have to meet the total amount that you pay out in gross payroll. So it's kind of a dual kind of doing one of these things. So the more you pay people is not necessarily going to even out the 75% calculation.
And here's a question on that head count.
Mm-hmm.
If they don't have the same count as 2019 and they rehire, and that's a key word there, rehire, I'm assuming they're meaning the same people. It would have to be, I think, the same people, correct?
Correct.
To meet the 2019 head count.
Mm-hmm.
They can't hire new employees during that time?
They
Or
can.
what are you?
Yeah, they can if the person they're trying to bring back, so they furloughed somebody or laid somebody off and they're trying to bring them back, but that other person has already received a job and they decline to come back, then you can hire a new person to replace them. But in all actuality, they would like to see you bring back anybody that you had on pay, the exact people, one for one. But there are some natural occurrences that they are accounting for.
You've got a deadline, I believe it's June 24th, to get everybody hired back.
Mm-hmm.
And do subcontractors included in the FTE count?
No. Subcontractors are not considered as part of the forgiveness calculation because they're not employees. And each of your contractors is eligible to apply for their own PPP loan. So they are excluding anything that was given or received from the PPP, because there was a portion of time that the PPP loan application was including contractors before they opened it up for sole proprietors, and in that period of time, money was issued. So anybody that received that needs to be prepared to pay that portion back that they were given for the contractors, because now the contractors are eligible to apply for their own PPP.
So a subcontractor is actually a business of their own, so they would apply as their own business.
Yeah, they're considered sole proprietors.
Great. Let's see. Another question here. They changed phone and internet providers in early March. Does that mean utility payment won't be eligible?
No, as long as it's part of your normal operations, I think changing would be okay.
You got the February 15th issue. Depending on how they interpret, if you had cell phone coverage before February 15th, or if you had this cell phone coverage before February the 15th, and I don't know the answer to that. I tend to think if you had cell phone coverage, you'd probably be fine.
I think it's just going to be a one-for-one expense, but that's going to be a question for the lender, because it's their interpretation of what they are going to forgive. So if the bank that you're working with, if you call them and you say, hey, I changed providers, but it's the same expense, or I'm saving money, or whatever the condition was that you switched, then they might allow that. They might be lenient enough to allow it, or they might say no and be really strict about it and want you to include it as a non-qualified expense.
Great. And when it comes to the health benefits are only employer costs and not the cost to the employee pays, and not the cost that the employee pays towards health benefits. Is that correct?
It is only the employer's portion of the health insurance and the employer's contribution portion of any retirement benefit. And on the spreadsheet that we provided, it has a little pop-out comments that kind of explain each of the different columns in the Excel spreadsheet. And one of those columns is the benefit section, where it does explain it's only for the employer portion of those deductions. And the other thing to keep in mind is if you have anybody that is over $100,000 in salary, they're only going to be forgived for $8,333 of their per payroll for each of their payroll checks. That's anything over that is going to be considered not forgivable.
Got it. Great. And then just there's still a few questions, and I know we kind of covered this, but if we want to make sure we're elaborating a little more into sole proprietors with no employees, is payroll based on 75% of the Schedule C income or actual pay?
I believe it's 75% of the Schedule C income.
And then the home office expense would be whatever was included in your Schedule C?
Correct. So they're going to provide more clarification on that piece of it, hopefully soon, because there are going to be some sort of props that start the forgiveness process here in another couple weeks. But so that, because there is a standard home office deduction that you can take, and then there's the detailed home office deduction that you can take. So if they're taking the home office deduction on the standard, they need to provide more clarification on what percentage that's going to equate on the forgiveness side. So that's, again, working with your lenders on their specific requirements and what they're going to be counting.
Great. Okay, and then one last question. There's a few more, but I'm going to go ahead and wrap up. I know we're coming close to 11:45 here. Can I pay straight from the new formed bank account with PPP funds for payroll, etc.?
You can, as long as you're only using the forgivable portion, because not 100% of the payroll you run every time is forgivable. That's why we're recommending the transfers and do the calculation of the forgivable portion and only transfer the forgiveness portion. But if that's the only option you have, then just make sure you keep really good detailed records.
Great, thank you. Thank you, everyone. Great questions, wonderful information. Keep us posted. If we can be of any assistance, please reach out to the Women's Business Center. You can schedule a business advising session, or we're happy to connect you with Rita and David if you need their contact information. Feel free to download the slides and the calculator, the Excel document in the handouts there. If you are not connected with us via computer, if you're calling in, feel free to email the Women's Business Center and we will email you those handouts. But thank you again, everyone, for joining us. Great session, lots of really good information. And yes, one last question. We did record this webinar, so it will be available for replay after we wrap up here. So
Great.
Thank you both.
And we're trying to keep our website updated with the latest news. So please check that at PlemonsCPA.com. We'll try to keep you posted with what's going on there.
Yes, and I am putting that here in the chat here, so folks can reach out to the LiftFund Women's Business Center. It's liftfund.com/WBC and the PlemonsCPA.com. And we look forward to hearing from everyone. Thank you so much for being with us and for putting all this information together. It's been great having you guys. Thank you.
Thank you for having us. Okay, what do I?